Hi, welcome to the second edition of the Financial Fox. I'm here with the well-known analyst Zach Meir, and joining us today is Michael Masterman, Chairman of WRES and CEO of the newly listed Saffron Energy. So Michael, let's kick off with the Saffron. Now, we had an update this morning on Bezzecca, which is now producing from level A, and production is above the expected rate. That's pretty good, because also more production is going to be added later in the year to reach around 30-35 standard cubic meters. I mean, you have done everything right, so you have delivered on all the promise, everything is done on time, and everything is going to be converted in our cash and revenue back to the company. So, you know, would you like to just expand a little bit more about this update, this RNS?
Yeah, look, we've moved to what's sometimes called commercial production, which at the end of the day means you sell the gas and you make money. We did the IPO in February, we had the plant completed in March, we had full ministry authorisation in April. We completed the testing through April into early May. We tested every single level, level A, which is the shallowest level, and also R and S. And we've just updated the market on the results of that. Level A, which is the Pliocene level, which is always the best sands in Italy, is producing above expectations at around about 25,000 cubic metres a day. That's on at the moment, that's pumping into the Italian national grid. And as you said, that's turning immediately into revenue and cash flow. We had solid results on the deeper Miocene levels. We're just making some small modifications downhole to install a choke. Very small capital expenditure, probably about 2-day payback. And that'll allow us to produce all 3 levels at the same time and take our production rates up to 35,000, which is a good rate, above the CPR in our February IPO.
So what revenues are you expecting?
We're looking from July at around about 250, 260,000 euros a month, and probably 80% profit margins at the wellhead at that rate. We'll take a number of initiatives with the other fields to further increase production. We have Sant'Alberto coming at the end of the year, and a lot of work's going into making sure that comes into production. Solaro is still operating, producing very strongly. Its production has exceeded its 2P reserves, so it's a good steady producer, not showing any signs of slowing down. So we've got Solaro, Bezzecca, Sant'Alberto to come at the back end of the year, and Saffron's in good shape.
So do you think that, I mean, the market doesn't really, I mean, the AIM stock, companies on AIM tend to be pre-production or looking at sort of blue sky opportunities. Here, you've hit the ground running, you've got everything firing on all cylinders, if that's the right analogy, probably isn't. But I mean, the market cap currently £11 million and all this cash coming through. What is, from your professional opinion, where should the market be valuing it?
Look, it's sometimes when you've got steady production that some people say, well, why didn't that happen more quickly, or where's the next set of jam tomorrow? I think if all we do is do what we said we'd do in the IPO, we're going to see very steady production growth from about 1.5 million standard cubic feet per day to over 4 million. So we can just grow from what we've got.
Is this a mid-cap producer then? Is it, I mean, what's the scale of the? Because I mean, at the moment it's valued as if it wasn't producing anything. I mean, £5–10 million. You have companies on AIM which aren't doing anything at all, valued that amount. So, is it going to be a mid-sized company? How can investors who are new to this company gauge the prospect?
Well, I think in some ways, because we produce gas and because you can calculate what the profits and margins are, I think, and as we grow that production, I think it's going to be, the cash flows are going to be very transparent to shareholders. And, you know, in this zero interest rate world, if you can have a company that actually generates good profits, that's a lot more valuable than the more speculative players that are sometimes focused on AIM. I think one of the things we are going to be able to do, and this is, you know, keep your eyes out for this, we're going to be able to take the platform that we have with Saffron Energy, with 2 and then 3 gas fields in production, and substantially build on that. If we can have, you know, one of the leading natural gas production companies listed on AIM, and, you know, over time have firstly a fourfold and then a much larger increase in our production and our cash flows. That's really going to underpin a much larger mid-cap capitalisation.
So you are saying that basically you are looking also maybe for some acquisition, to increase the value of the company, like Sound did. They started with a small portfolio in Italy, then they added something in Morocco. So is that also something that you are looking at different opportunities?
Yeah, look, we have a really good technical team, a really good commercial team. We're heavily networked both through Italy and other parts of the world. And we're not racing off to do any particular transaction, but we know at this $40, $50 oil price level, the big companies want to get rid of their smaller assets. There's a whole lot of opportunities to grow production and grow cash flow in a way that really delivers for shareholders, and we're very shareholder focused.
And Michael, can I just pick up on some concern that investors had recently? Some of them after the IPO, the share price dropped recently and they were worried the broker was selling, some other there was a placing on the way. I just would like you to comment a little bit about, this likely drop in the share price and, how do you see that?
We're trading well up on our IPO price, and I think one of the brokers was saying that the Financial Times had us as one of the more successful IPOs this year. So from that perspective, we've done very well. I think there might have been, if you like, an oversimplification of what we do. We're running, 2 coming on 3 natural gas fields. We're dealing with hydrocarbons 2.5 kilometres beneath the Earth's surface. We do need to, we have very clean gas, but we need to clean it up a little bit so it goes smoothly into the pipeline. There's some quite complicated chemical processes to achieve that. And number one priority, we just got to be safe and secure and meet all the regulatory requirements. So if we take a little bit more time to do that, if we're a little bit more conservative in terms of making sure we systematically test each level before we go to the next stage of production planning, that's good.
So basically they're being just impatient, they just wanted, some news flow to come out quickly when actually it's not just you turn up the tap and gas is flowing, but the process is a bit more complex.
Not many companies that can list 4 weeks later have the gas field complete and 4 weeks later have turned it on. But investors need to realise we're not talking about a garden tap where you turn on the tap and the water comes out. We're talking about a high production pressurised gas field, and we've got to be safe, secure, and have very good social licence, and we do.
Yeah, all looks really good. So
I want to talk about your other day job, WRES, the company which probably known by more people over the past couple of years. You've had a resource upgrade and update today. Run us through that.
Okay, so we just announced the upgrade in the JORC resources for La Parilla. La Parilla is our flagship tungsten asset north of Seville in Spain. Very good results. Grades up overall, 4% increase in grade on the tungsten, 2% increase on the tin. But probably the most important thing, and we've upgraded some of the resources into the measured category. The measured category is the highest quality resource categorisation when you have JORC resources. Most important thing, and again we focused on cash flow, is what grade we can get into the plant in the first couple of years. When you're bringing a new mine into production, you want to be able to make sure you can cost effectively get the best ore into the plant, so that translates into higher revenue and higher profitability. We've seen in this announcement that we can achieve an over 40% increase in the grade we can deliver to the plant in 2018, and around about a 25% increase in the grade we can deliver to the plant in 2019. So for startup phase, that makes a big difference. And we've been able to do this because we discovered this very thick, very high grade zone from surface in La Parilla South. So La Parilla's very well set up. It's got fundamentally strong earnings capability. We're very much focused on a debt financing at the moment, which will, I think, very efficiently deliver for shareholders in terms of the funding of what's a very low cost and very large project.
So you think the shareholders who are fixated on the share price will start to see, I mean, there's been a 5% jump today in the share price on this update. You think we may have turned the corner in terms of the market appreciating what you're doing there?
I think we also need a little bit of patience on the WRES front, but the team's been working very hard. They've been delivering on all the fronts, and I think probably the inflection point, the change, the thing that will make a major difference to the outlook for WRES is when we put in place the debt financing for the project, and that's a big priority for us now.
And the spin-off for the company, how's that going?
Copper Gold Resources, we're working like that duck on the lake with the feet beneath the surface, paddling very quickly. Our copper assets, our gold assets are valued at absolutely zero in our market capitalisation. We want that value in those assets to be more directly held by the shareholders of WRES, and we're working to prepare Copper Gold for a spin-off probably just after the summer.
Okay, that's everything for the second edition of the Financial Fox. Michael, thank you very much for being our guest, and thank you, Zach. See you next time.